Hey everyone, welcome back to Nim's Adventures to Financial Freedom. Today, we're going to talk about something that can really take your dividend investing to the next level. Weekly dividend paying ETFs. Imagine getting paid every week, being able to reinvest that income faster, and watching your portfolio grow even quicker. Sounds great, right? Let's dive in and I'll show you how it works and which ETFs have recently changed the game. Before we jump into the specific ETFs, let's take a moment to explain the power of dividend compounding. In simple terms, dividend compounding is when you reinvest the dividends you earn back into your portfolio. Over time, these reinvested dividends generate even more dividends, creating a snowball effect. This is one of the most powerful strategies for building long-term wealth. And the more frequently you reinvest, the faster your portfolio can grow and compound. Now, most dividend-paying stocks or ETFs pay monthly or quarterly, which is great. But imagine receiving those dividends every week. That's exactly what some new ETFs are offering, providing a faster way to grow your income. So, why is getting paid weekly so important for accelerating dividend compounding? Well, it's simple. The more often you're paid, the more often you can reinvest. With weekly payments, your cash flow becomes more consistent, and that gives you opportunities to make reinvestments quicker than with monthly or quarterly payouts. Let's break it down. Faster reinvestments mean your money starts working for you more frequently, which speeds up the compounding process and helps you build wealth faster. On top of that, you're able to jump on opportunities quickly, especially when a stock dips, giving you a chance to buy at a lower price. And when retirement comes, instead of waiting for monthly or quarterly checks, you'll have cash flowing in every single week, perfectly timed to cover your ongoing expenses. Another key advantage? You can strategically time your investments around different stocks' ex-dividend dates. For example, if one stock's ex-dividend date is coming up this week and another's is next week, you can spread your investments to capture dividends more frequently. With weekly payments, you can be much more flexible in your portfolio strategy, helping you optimize dividend income across multiple stocks or ETFs. All right, let's dive into the exciting part, the ETFs now paying weekly dividends. We've got one newly launched ETF and two recently adjusted ones that fit the bill perfectly. The first ETF on our list is RDTE from Roundhill, a new addition to the weekly dividend payers. RDTE, like QDTE and XDTE, uses a covered call strategy, but focuses on the Russell 2000. This ETF utilizes 0 days to expiration options on the Russell 2000, providing overnight exposure to the index and generating consistent income by selling out-of-the-money 0DTE calls each morning. With an expense ratio of 0.95%, the same as QDTE and XDTE, this innovative strategy captures daily market movements, giving investors an edge through frequent weekly payments and the growth potential of small caps. It's worth noting that both QDTE and XDTE have outperformed their growth equivalent ETFs, SPY and QQQ, respectively. Following the same strategy, RDTE has a good chance to do so as well with the IWM. Due to the higher volatility of small-cap stocks, RDTE's yield should be similar to or even exceed that of QDTE, which currently offers an impressive yield of around 40%. With the Fed signaling potential rate cuts, now might be an ideal time to consider RDTE, as small-cap stocks tend to perform well in such environments. The combination of small-cap volatility and frequent option premiums makes RDTE particularly attractive for income-focused investors. Next, we have some big news from YieldMax. YMAX and YMAG, which used to pay monthly, have now shifted to weekly payouts. Both ETFs use a synthetic covered call strategy, generating income through option premiums. YMAX is a fund of funds, investing in various YieldMax ETFs, while YMAG targets the Magnificent Seven tech giants like Apple, Tesla, and NVIDIA. This shift to weekly payouts allows for even more frequent compounding, letting you reinvest faster and optimize your portfolio more often. More dividends, more often. It doesn't get much better than that. Now, let's talk about why weekly dividends are such a game changer when it comes to retirement planning. If you're aiming to retire and live off your dividend income, weekly payouts can provide more consistency in your cash flow. You won't have to worry about budgeting for a month or a quarter at a time because you'll have money coming in every week. This means you'll enjoy smoother, more reliable income to cover your living expenses without the need to wait weeks or months between payments. With consistent weekly payouts, managing your finances in retirement becomes easier and less stressful. You'll have the flexibility to cover expenses as they come up and better predict your income. To wrap it up, whether you're building your portfolio or getting ready for retirement, weekly dividend ETFs provide more frequent cash flow, faster compounding, and greater flexibility. ETFs like RDTE, QDTE, XDTE, YMAX, and YMAG are paving the way in this space and could be a valuable addition to your income strategy. As we've discussed, frequent dividends can accelerate compounding and really boost your income. Now, managing these dividends across multiple portfolios can get complicated, but that's where Snowball Analytics comes in. I rely on Snowball Analytics to seamlessly track all my portfolios in one place. It highlights my passive income alongside my net worth, keeps me updated on top gainers and losers, and even shows when my next payment will land. The holdings page offers a breakdown of total profit for each asset and in-depth performance analytics. With these tools, plus a vibrant community of investors, Snowball makes my investing journey smooth and efficient. You can register for free using the link below. And if you're already using Snowball Analytics and want a discount on premium features, use the promo code for a 10% discount. As always, this video is for educational purposes only and not financial advice. Be sure to do your own research before making any investment decisions. So, what do you think? Could weekly dividend ETFs be a game changer for your portfolio? I'd love to hear what you think. Share your thoughts in the comments below. If you found this video helpful, be sure to give it a thumbs up and hit that subscribe button for more tips on growing your passive income and working toward financial freedom. Thanks for watching, and I'll see you next time on Nim's Adventures to Financial Freedom.